Good morning to all traders and welcome to this Wednesday's Market Insights video. Today we're going to talk about the metals and energies for a change. Actually, we haven't seen any headlines regarding the trade war. Situation with coronavirus, of course, continues, but we haven't seen any dramatic headlines or surprising headlines. The dollar, however, kept falling because of Fed's decision to hit an average inflation of 2% last Thursday. However, after the index actually reaching a two-year low yesterday, we've seen a reversal, okay? We've seen a bounce, and as a result, the truth is that euro was already weak because of poorer PMI figures in the EU. As a result, so I was saying that we've seen a reversal in most of the assets, and that drove down as well the prices of gold as well as oil. Gold did decline indeed, but it was already trading up. Oil also declined. It was already trading up, and it was also supported later on the session by the API report. But do not forget that today we're expecting the ADP, right? Yesterday we had, at the same time, just pre-order reversal, to be honest, we've also had the US PMIs delivering very good figures, and this is what supported the dollar. We'll have ADP today to pay attention, and also the EIA for the oil markets. Now, aside from the EIA, though, we have had a quick look on the landscape of the oil markets. We've had the United Arab Emirates delivering, actually being non-compliant because they've supplied more crude oil than they were supposed to due to the increasing demand for electricity as people use the air conditioning now since they're actually locked in the house all day long, and they're going to compensate for the lack of compliance in a little bit in September and also October. Now, does this mean that demand is going to increase? Well, we do not know. We do see demand from China increasing, but prices are consolidating in the oil market, okay? And this is an indication that there is a lot of hedging going on in the oil markets, okay? That also suggests that there's going to be a huge breakout at some point, and I fear this is going to come soon. Now, I want to go ahead and start with the gold markets. We looked at this scenario last week. We talked at this potentially turning either as a flat or a triangle. Now, I tend towards the triangle pattern because, well, if we assume ABC and ABC, well, this is corrective. So that is not really the case here, right? So no flat. So I believe it's either that we'll have wave 4 down here and we're going to get 1, 2, 3, 4, and 5 as an ending diagonal for 5, okay? Or most likely, and this is the scenario I'm supporting for the time being, this is going to be a triangle, okay? So it's either we'll have A, B, C, D, and E, which means that we're going to end quite soon. It's just we're waiting for another drop to the downside for wavy, and then we break up. Or that might become a little bit more elongated, okay, and that will be A. We're going to have a B, we're going to have a C, then a D, and then an E. The signal on the MACD as well as on the RSI is still positive, and that's why I believe we're in wave 4. The other scenario, though, which is not supported by the indicators as much, 5-wave move done, and this is also the primary cycle wave C, right, which seems to suggest that this is 1, 2, 3, 4, I'm going to get a 5 down here, right? And this could be wave 1 of, potentially reversal to the downside. Now, all markets, well, we are seeing signals, repeat signals here for downside, right? On the RSI and the MACD as well. We'll be talking about this being an ABC for wave 4, and it looks to me like it's ended. Now, is it going to last a bit longer? Well, it can be dragged for a while, but we still remain around the 42.30, which seems to be a hedge level at the moment, okay? We're either going to break up or down. If this is a wave 4, we're going to break down for wave 5. The other scenario, of course, is that we're going to break a little bit higher up, okay? And this is still part of wave 4. That sees this correction as complex. And we've done wave X of 4, and we're expecting now wave Y of 4. And from there, we're looking at prices to move lower. Or since we're expecting the breakout, well, that scenario also must be revealed to you, okay? 1, 2, wave 3, wave 4, and this is wave 5. That means this is, or perhaps we can move higher over here, right? Because this is 1, 2, this could be like 3, 4, and then 5 for an ending diagonal around the 47 or so level, okay? And from there, we're gonna see a correction for wave 2. And quickly on silver, a very similar pattern with the gold, but we are only in wave 1. I believe we are in a W, X, and Y correction over here on silver, okay? Because we are in a wave 2, we cannot have a triangle, obviously. Since we've started moving lower now, and that makes this corrective, right? It's going to get to Y. Then perhaps we're going to get a triple zigzag here. Depends on whether the gold market as well is going to have a triangle over here or a triangle over here. I would expect the 29.96 to be my validation level. Now quickly on natural gas, I've changed my view the other day. I was looking at this to be an A, B, and a C flat, expanded flat, but we broke above the 6-to-1 extension over here. I think it was around 2.3. So this now extension had me change this account. We've had 1, 2, wave 3 down here for primary degree. We are in a correction, wave 4 for the primary degree again. We're going to see another move to the upside. Now, we could have ended down here, and this is indeed an impulse to the upside, which means this is a reversal, okay? Don't be surprised. But if we take into consideration that we are still in wave 4, okay, then to me, we are still not done in wave A either of wave 4, okay? So this is 1, 2, 3, we're going to get a 4 and then a 5 to complete wave A of the intermediate degree, then B and a C for wave 4. And this wave A, to me, looks like it's going to go near the 2.7 because this is the 38.2 Fibonacci retracement of wave 3, right? The other scenario, of course, and looking at the main one of being a correction, of this move being a correction, it means that this is an A, B, and a C, okay, which means 1, 2, 3, 4, and 5 was done indeed, and then this is indeed the first move, either wave 4, okay, so we're going down straight, or this is a W, we're going to see an X and then a Y. And last but not least, the palladium over here. We looked at this opportunity a few weeks back, if I'm not mistaken. We are moving in a triangle pattern, okay? So A, B, C, D, E. So we could either have wave E down here ending, and then, but it will depend on whether we get a break above that level or not. For the moment, we are bouncing, we are testing this level, right? So it could be a case where we'll move down, we'll take out wave V, and then we shoot higher because we're still in wave 4, okay? And that's going to go, of course, above the 28.79 or whatever that level is at top. In case we break above here, it means that we're going to get that move happening much sooner than expected. And it's actually fairly soon, okay? That means that this is a wave 1, this is wave 2, and this is part of wave 3, then 4 and 5, probably 1 in the intermediate, a 2 and a 3, and expect fresh highs. So this could be all for the day. Thank you very much for watching, and we'll speak again tomorrow.